Hello, my name is Oleg Kuzhikov. I'm with Silicon Valley Innovation Center, and today we're going to talk about the secrets of investing in technology startups. So, how venture capital creates new wealth. Venture capital is a catalyst of economic growth, and the success of the venture capital industry is highly visible. To put things into perspective, combined market capitalization of Apple, Alphabet, Microsoft, Amazon, and Facebook is currently under 4 trillion US dollars. And what these companies all have in common is that they all have raised venture capital. And this unique form of investing really brightens perspectives of entrepreneurial and prospects of entrepreneurial companies, helping them with solving the capital constraints. And moreover, venture-backed firms typically grow faster than their peers that have not raised venture capital. And also, along the way, venture capital generates tremendous number of jobs, it boosts corporate profits, and overall improves the quality of the workforce. And finally, venture capital exerts a powerful effect of innovation, and that resulted in 600 billion US dollars in valuation of privately funded venture companies in the US at the end of last year. Venture industry has been experiencing significant transformation in the last 10-15 years. The venture capital playbook has changed, driven by the change in innovation formula. In the past, it was all about taking the tech risk. Once you cleared that, you would get a good outcome either from acquisition or from an IPO. Today, innovation comes mostly in the form of software, which has low technical risk by high market risk. These drove smarter VCs to a new venture business model. These VCs now move downstream or later stage. They invest in companies that have proved that they have reached the so-called product market fit. And so these companies now in the position of commanding a much higher valuation premium. And so the obvious reason is whether this change in venture model makes it possible to maintain outsized returns, whether they are sustainable under these new assumptions. And the answer is yes, given that the internet has enabled much bigger markets to be addressed than it was available in the past, so that better companies are capable of achieving significant valuation and great outcomes. And if you compare the top companies by their size today, you'll notice that all the technology companies such as Apple, Google, and Amazon, and Facebook, they replaced the stalwarts of old economy that were leading the pack back in 2000. At the same time, there's been a shift in value creation. As the company stay private longer, most of the growth in market cap happens at the pre-IPO stage. So today, the spoils of new company creation are going mostly to private investors. And that makes the likes of Fidelity's and Oppenheimer's to move into private market and invest in private companies in their latest round. Think of this later round of recent unicorns. Another point that deserves attention is that it's hard to access the winners because great companies are hard to recognize early, but it's really nearly impossible to invest in them on reasonable terms once it becomes clear that these are the winners. And you can also, as an example, think of the later round of different leading unicorn companies. And finally, it turns out that the value creation is rather broad-based, and that the widely held belief that 90% of venture returns created by top 10 deals is rather catchy but unsupported claims. According to a study performed by Cambridge Associates, returns in the post-99 era, about 61% firm account for value creation in top 100 investments every year. So the value creation is broader based than it was believed before. Is investing in startups an art or a science? Although there is a broader understanding of the important role that venture capital plays in catalyzing economic growth and innovation, as well as in jobs and wealth creation, the inner workings of venture firms, their processes, how they make decisions, are not necessarily well understood and are rather opaque for industry outsiders. And to address this information asymmetry, Silicon Valley Innovation Center has created a 5-day immersion program taught by top Silicon Valley venture practitioners and thought leaders. Our program provides you a unique opportunity to master the skills necessary to develop venture investment strategy and make sound and thoughtful investment decisions, just like the professionals do it. Another distinctive benefit of the program is face-to-face interaction with premier VCs, promising startups and leading technology companies that create impact both on the consumer and enterprise sides in the Silicon Valley and far beyond its boundaries. So what's included in this program? It is designed as a deep dive in the Silicon Valley ecosystem with a strong emphasis towards gaining relevant hands-on experience from exclusive access to local players and game changers, such as VCs, entrepreneurs, startups, and fast-growing companies. During stimulating learning sessions, you will learn the rules of engagement, not from the theorists or academicians, but from the practitioners who are living it daily, as they work with numerous entrepreneurs and their startups, make decisions where to invest and how to help their portfolio companies. Hands-on workshops led by VCs would allow you to practice the newly acquired knowledge on how to assess the investment opportunities and to make the right decisions. Finally, another goal that our program aims to accomplish is to offer a top-notch quality networking opportunities to those seeking to expand their professional networks and to establish relationships with the Silicon Valley insiders. What will you learn? Over the course of the program, you will get introduced to the world of venture capital, its past, present, and the future. You'll explore the industry landscape, learn about the types of players on the scene and how they differentiate one from another. You will learn how venture investors evaluate investment opportunities, how they add value to their portfolio companies, and how they generate returns. You'll see what's next in venture capital and what trends are driving the industry transformation. During the program, you will meet with and evaluate the merits of numerous consumer and enterprise startups at different stages of their development. And at the end of the program, you'll have a solid foundation for development of sound and solid venture investment strategy. This program would represent an excellent opportunity to start building the investment funnel, because there are two critical components to successful venture investing. First, you need to have skills to evaluate deals and make the right decisions, but second, you'll need to have access to great opportunities. And while learning this insider knowledge from professional investors, you would gain not only valuable know-how in the art and science of venture investing, but also you'll start building your investment funnel by accessing the Silicon Valley-based startups. And this is also going to be a great opportunity for you to expand your professional network with local industry insiders. Who should attend the program? The program is dedicated to provide an insider perspective on venture investing to both corporate and private investors who want to gain a first-hand knowledge of venture industry. Those include high net worth individuals, angel investors, representatives of family offices, nonprofit organizations, endowments, or foundations, aspiring VCs, and institutional asset managers. The program can also bring value to entrepreneurs who consider raise venture funding, and to the service providers, including lawyers, accountants, and consultants who work with both venture capitalists and entrepreneurs. This is a quarterly program. The next will be held in San Francisco starting July 23rd through July 27th, and the following starting October 22nd through October 26th of 2018. If you would like to learn more about this program, please visit venturecapital.academy. Thank you very much.